Good bounce back day here on the concentrated Nvidia trade, but still needs to go a little bit further because this is a market that likely only has a couple outcomes. First, let's rewind. The yellow light on my risk radar came on as stocks, dropped the green light on the 14th, which was about 7 trading days ago. So not the worst timing, because part of it was that we had such a big valuation run up in the big tech and the AI trades. That's number one. Number two is that if we're going to lose the strength of Nvidia, the idea of this ex-Nvidia rotation just doesn't resonate with me. I feel like the only options right now are either the high beta Nvidia-driven swing, which is we rip back up and we keep on grinding higher, or we break down into a more higher correlation style of sell-off. The idea of rotation and the attempt to rotate outside of Nvidia just doesn't seem to add up for a few reasons. Firstly, let's look at the chart of the semiconductors versus the equal weight index, which gives us an idea of where the momentum is. It's just so powerfully in favor of the semiconductors. Obviously, the blue line, the SMH, has been a beast. The equal weight has been much more sideways. And even in the last couple days of strength here, we did have this little pop. I mean, that kind of spread is fairly novel. We haven't really seen that much at all, which is semiconductors coming down while the equal weight goes up. That's a very unique situation over the last 4 days, excluding today, of course, in which the equal weight came back down. But it's just a world of a difference in terms of technical strength. All the technical strength is in the semis. There's not much at all in the equal weight. It's going to have to take something pretty profound. The other thing, too, is that there's just still a lot of absence of animal spirits in the market outside of the AI trade. I've talked a lot about Bitcoin and how weak Bitcoin has looked relative to the rest of the market for risk assets. Stocks been making highs, and Bitcoin's just been stuck here now in the range for months. The breakdown that we got to BTC found some support at 60K. That's really got to hold, or else the chart could get really dicey. And keep in mind, this isn't even a short-term read. My read on Bitcoin hasn't even altered much in the last couple weeks because it's at such a really key point on its long-term chart, which I pointed out resembles this kind of rounding top, which is how I think an asset with no intrinsic value would actually peak out when you just run out of buyers. The ETF was basically the last doorway for buyers to come rushing in. So now it looks like we're still potentially in a failed breakout compared to the other two previous highs that were up around 70K. Remember, the RSI throughout this entire period didn't even get above where the other one was. So we could still be in this sort of divergence, this bullish divergence. So Bitcoin telling us that risk appetite and animal spirits just really aren't there outside of the AI trade. The other thing, too, is that the bond market's telling us that we really need some good economic data. If you're going to rotate into cyclical stuff and things that depend on the economy, then you either need to have one of two things: a really strong economic outlook that's surprisingly positive, which it's not. Our economic data have been missing expectations, or you need the rate cuts. But we're not going to get the rate cuts until at least September. That leaves you a big gap of time here in which there's just not a very compelling case for a rotation into cyclically dependent and economically dependent businesses. The yield curve tends to twos is at the very tick low on the year. That's not good. It's not good. We're getting more inverted again here over the last couple weeks. That is not what you want to see. The tens to twos spread contracting, telling us the economy is not in a good state in terms of its strength versus inflation. Economy's okay, but relative to inflation, it's not ideal. That, combined with the lack of animal spirits signaled by Bitcoin softness, tells us that if the AI trade dies out, there ain't much else to go on.